FAS was a nice short yesterday. Big reversal candle. This thing is, you know, just extended. Reminds me of January 2018 when it also had like a year-long trend. It was trending higher and had this reversal candle. So that's why I shorted it late day yesterday. Like there were some day trading opportunities in some of these names, like Palantir. Or maybe that's not a great example. But even if they rally, they're gonna rally into these declining moving averages. That's the problem. Damn, ETHE. This thing is showing relative weakness to the coin. I was thinking about it, but the thing is, it was only day one. If there had been one more update, I would have probably, you know, shorted some yesterday. But I'm very cautious shorting day one. I've been run over a few too many times shorting day one. Yeah, I mean, there was a good day trading type of... when you get these big gaps, especially in the indices, you know, many times they do reverse, at least for a while. Like this type of volatility is, you know, creates opportunity for day traders, but again, I'm here for the big moves, not some few hour moves. Yeah, I did mean versions. I did some flag type of setups, both breakouts, breakdowns. It's the same setups, just on a lower time frame. No rocket science included. You can enter in the 1 minute, you can enter in the 5 minute. But if you're a day trader, you should probably, you know, do the 1 minute and maybe add on the 5 minute if it's not up too much. Level 2, no. I've never been much of a level 2 guy. It moves too fast for me. Only thing level 2 that's been helpful for me is on OTC names, but nowadays OTC names are dead. They're pretty much dead since 2013. So, but Fannie Mae in 2013, it was like, if we get an opportunity like that again, I'm gonna make 20 million, 30 million in that trade. Fannie Mae in 2013. Oh man, you saw the level 2. They were like, all the orders were stacked. Like you could see which way the stock was gonna go. It was like cheating. It's incredible. Yeah, CLF bounced like a champ. That's what strong stocks do. X2, FCX2, but those I'm not in, unfortunately. Yeah, W, I saw it. It was super strong yesterday. And look at it weekly. It's still building higher lows and it just keeps coming back to this upper end of the range. If it can, you know, go sideways here for a few weeks, I mean, it could be good. Just keeps coming back. And people have been calling this thing zero for so long. I keep seeing mentions on my own YouTube, like, oh, W is a $50 stock. And this is the one someone told me to like delete my account or something when I bought the breakout here. And then it went up 50% in a few weeks. People are so fanatical about the stocks. Fanatics tend to be losers. And yet, price action tells otherwise. You may have an opinion that this is a $50 stock, but it keeps proving otherwise. So you either change your opinion or, well, you get taken to the woodshed. KSS, they're holding up nicely. Like KSS, that's a good setup. Like, you know, if it tightens up a little bit here, these things are just kind of thin for me. But yeah, I mean, if we can tighten up a few days, I mean, it would be a really good setup. JWN, this is a little bit all over the place. But, you know, Macy's also not as, I mean, I guess, you know, if they can break out, could make big moves. It's one of the stronger sectors right now, department stores. I sound like a loser. There comes David. Thanks, David. Thanks for the daily compliment. Appreciate it. People on like YouTube who haven't followed me for long, they always ask me, who's David? Well, here you go. Here's David. What's my normal routine like? I usually check in on the markets either from my laptop or my phone, like early pre-market, maybe like a 2 hours, 2.5 hours before the market open. Just, seeing so my positions, and not any of my positions are having any crazy gaps or anything. And then I check in again maybe like an hour before the market open, and then I go get to the computer maybe 20 minutes before the market open. If it's earnings season, or if the market is like there's a lot of things going on, obviously I'm getting to the computer much earlier. But right now, when everything is kind of been very slow, I get to the computer kind of late because there's just not many things going on. You don't have to do a lot of preparation. It's not like, November to February or March to July when things were just going crazy. And obviously during earnings seasons I'm also a bit earlier because there's just a lot of preparing to do. Opening range highs. I wasn't really aware of the concept opening range highs until I read a book. I think it was Toby Crable. Like it was some kind of a futures trader who made like $1 billion trading opening range highs. That's where I got the concept. I don't remember what his name was. I don't even remember the book. And so I did what I'm best at. I just stole the idea. It's kind of nice when other people figure things out, and then you can just take what they figured out and apply it on your own trading. You don't have to use much brain power. I don't like using brain power. Using brain power is for geniuses and for people who think they're geniuses. Most people are just better off just copying what works. But everyone wants to reinvent the wheel, and very few do. Like, I've literally copied every single trading concept, every setup, everything. The average daily range, like the EP setup, the breakout setup, the parabolic short. None of these things I discovered myself. Even this new thing, the red line, some people noticed I've started using the red line. That's to alert me when a stock gets close to my stop, so I can prepare, because I've had a lot of slippage on my market stops, as you all guys know. So I'm trying to get out manually and try to get better prices. That I copied from Stock Daddy, one of my moderators. Yeah, that's a great Bill Gates quote. Lazy people will find ways of doing things more effectively. Well, kind of lazy smart people. Not lazy stupid people. Lazy stupid people are just lazy. Lazy smart people will find out more effective ways to do things. That's true. I'm definitely gonna watch the VXX and these volatility instruments because, look, it was a long time ago we had any recent, decent correction. And, these things, look, I'm not looking for something like this to happen again. But, these types of spikes, where the VXX goes up 30-50% in a few days or a week, that's something could very realistically happen if we, pull back to the 50-day or even the 100-day. If this bounce doesn't stick, that is. Because you can clearly see there's some volatility or some premium building in. Like, the SPYs didn't hit the lows of the day, but VXX took out the highs of the day. So there's definitely some relative strength in this thing. Doesn't really mean anything. But, combining with the fact that the SPYs do look very vulnerable. Like, if you study, where big pullbacks in the SPYs have happened, they usually happen when you get these long trends, when the SPYs just, surf the 20, the 50, the 100 for many months and sometimes even over a year. and then they lose their uptrends. They lose the 10-day, they lose the 20-day. You can get some pretty bad sell-offs in a short amount of time. Same thing, something like, look at what happened early 2018 or September, October 2018. Or, something like May 2019. You get these long range breaks, or something like February, March last year. Obviously, there was another type of catalyst for that sell-off, but just if you just followed the technicals, it broke the uptrend and then started going lower.